There is a particular kind of madness that only emerges when the most powerful government on earth decides to just wing it on trade policy. When the rules change overnight, when the Supreme Court says one thing and the executive branch says, yeah, but what if I just didn't care? In 2025, retail traders weren't just fighting the market. They were fighting a tornado wearing a suit that kept changing its own wind speed. 5 stories, 5 different flavors of chaos. A war thesis with no oil. A $330 billion valuation debate. Tariffs that changed twice in one day. A confessional thread where 99.9% of people never make it back. And a $175 billion government refund that somehow goes to everyone except you. This is trading in the tariff tornado. Welcome. Grab a drink, you're going to need it. Trade 1. We start gentle. We start with a man who looked at rising geopolitical tensions with Iran and thought, I see this, I understand this. I will make a play. His name is Botman, and he is about to become a legend for all the wrong reasons. He posts his thesis on WallStreetBets under the flair DD, which stands for due diligence, a term I use loosely here. The thesis is actually structured. 2 scenarios. Scenario 1, escalation. Defense stocks go up, crypto goes down. Scenario 2, de-escalation. Tech stocks go up. Crypto goes down. Notice anything? Crypto goes down in both scenarios. This man has a vendetta. His picks, PLTR for defense, coin for crypto. He posts his positions. He even preemptively claps back at anyone who might suggest different stocks. Quote, dude, there are different ways to make money. Pick those if you want, I don't care. Confidence, respect, misplaced but respect. And then the comment section arrives, like a tsunami of regards. Top comment, 221 upvotes. There are indeed different ways to lose money. Beautiful, poetic, accurate. Second comment, if it makes sense, it's probably not going to work. You're 50 years too late to think while trading. This is the most WSB thing ever written. It is also tragically correct. But this is the one that ended him. 140 upvotes? Thinking about the repercussions of an Iran war without mentioning oil is a new level of regarded. Oil. He forgot oil. In an Iran war thesis, he forgot the one commodity that Iran's entire geopolitical leverage is built on. Imagine writing a 3-paragraph thesis about a war in the Persian Gulf, and not once, thinking about what that region exports. It would be like writing a thesis on a Starbucks earnings play and forgetting coffee exists. And then, 65 upvotes. 2 words that every trader in 2025 has heard more times than they can count. Priced in. The universal answer to everything. War with Iran? Priced in. Nuclear event? Priced in. Sun explodes. Already priced in, we rallied on the news. Let me take a second here to explain something. When people say priced in, they mean the market has already incorporated known information into the stock price. The theory is that rational actors constantly update valuations. The practice is that nothing is ever actually priced in, and you'll lose money either way. Moving on. The real lesson from Botman is not that he was wrong about PLTR or coin. The lesson is that macro event plays are notoriously hard to execute because the market moves faster than your thesis. By the time you're writing the DD, 12 hedge funds have already positioned. You are not the smart money. You are the exit liquidity. We've all been there. All right, trade 1 was a warm-up, a gentle introduction to the chaos. Now we pivot. Same stock, PLTR, but this time someone brought math. Dangerous amounts of math. Trade 2. Michael Burry, the man who shorted the housing market and turned it into a movie starring Christian Bale, drops a PLTR valuation bomb on the internet. And the internet does not take it well. The post comes from RSTalks, which is where people go when they want to feel smarter than WSB, but still lose money at the same rate. Someone found a comment in Burry's thread that laid out the math so cleanly, it physically hurts. Here's the math. PLTR has a market cap of $330 billion. It generates $2.2 billion in operating cash flow per year. That means if you bought the whole company, your cash return would be 0.6% annually. Before capital expenditures, 0.6. To make this even more visceral, look at what PLTR's stock price has done. It ran from under $10 to over $100 in a couple of years. The price went to the moon. The cash flow did not follow. That gap between price and fundamentals is exactly what Burry is pointing at, and it is a very, very wide gap. But wait, it gets better. With that same $330 billion, you could instead buy all of Lockheed Martin, all of General Dynamics, and 85% of Northrop Grumman. 3 of the most profitable defense companies on Earth. And together they generate $18 billion in operating cash flow. That is 8 times more money. 8 times. Let me break down what operating cash flow actually means, because this matters. Operating cash flow is the actual cash a company generates from its core business after paying its bills. It is a better measure of real profitability than earnings because earnings can be massaged. Cash flow is harder to fake. You either have the cash or you don't. PLTR doesn't have much of it relative to what you're paying. Now here's where it gets spicy. The bull camp fires back with the meta comparison. They say, at Facebook's IPO in 2012, Burry's logic would have kept you out of a 20 times return. And they're not wrong. Meta was also overvalued by traditional metrics at its IPO. The question is whether PLTR is the next Meta or the next, well, every other overvalued tech company that didn't become Meta. There is also this comment, which I want to read to you verbatim, because it is genuinely unhinged. Buying Palantir is like buying Volkswagen or some other Nazi supporting industry in World War II. 15 upvotes. The thread about valuation math suddenly became a history lesson. Nobody asked for this. Nobody was ready for this. And then someone else remembered NVIDIA. They said they looked at NVIDIA's PE ratio, decided it was unsustainable, and missed 300 to 400% gains. The market's greatest talent is making the smart people feel stupid, and the stupid people feel smart. Briefly. Very briefly. The PLTR debate is the eternal tension in investing. Fundamentals versus narrative. The math says one thing. The momentum says another. And both camps will call each other idiots until one of them is right, at which point they will have already lost money on something else. Okay, we've had a war thesis and a valuation debate. Both of them featuring PLTR, which is fitting because PLTR is the stock that makes everyone feel like a genius and a fool simultaneously. Now we zoom out, way out, to the actual policy tornado that made all of this possible. Trade 3. This isn't a single trader making a bad call. This is the entire market collectively losing its mind in real time. The tariff tornado touches down, and it is magnificent in the way that only completely avoidable disasters can be. Here's what happened in the span of roughly 24 hours. The Supreme Court rules 6-3 that Trump's tariffs are illegal. Markets breathe, traders exhale. Someone, somewhere, probably bought calls. Then Trump says, 10% global tariffs. Then, apparently not satisfied with chaos, raises it to 15%. The same day. Quick educational moment. What is a tariff? A tariff is a tax on imported goods paid by the importer, which is almost always a domestic company, which then passes the cost to consumers. So when someone says, we're making other countries pay, what they mean is, we're making you pay a little bit more for everything. It's not complicated. It's just unpopular to say out loud. The top comment on this post. 1,191 upvotes. Why doesn't he just make it 999 million% and be done with it? Since other countries are paying them anyway. This is what collective market exhaustion looks like. This is what happens when a population has been subjected to so many policy reversals that satire becomes the only rational response. 457 upvotes for this one. Congrats, another trade deal signed by Donald Trump himself is now worthless. The deals signed with Australia and UK had 10% tariffs. Under this regime, it goes up to 15%. So, the country signed trade deals, then immediately violated them. The art of the deal, indeed. That was actually another comment. 154 upvotes. Just the art of the deal. Nothing else needed. And then someone pointed out what a tariff actually is when you strip away the branding. 15% extra money you have to pay on top of the price of goods has a fun alternate name. Sales tax. 128 upvotes. Because sometimes the clearest take is the one that makes everyone feel dumb for not saying it first. 176 upvotes for this. I'm so tired of the word tariff. It's lost all meaning with this man. This is called semantic satiation. It's a real psychological phenomenon where a word loses meaning from overuse. The market did not care about the psychology. It just kept moving. The real trading lesson here is about policy risk. In a policy-driven market, your technical analysis means nothing. Your fundamentals mean nothing. Your DD means nothing. If the man with the executive order has a different idea while watching TV at midnight, your position is toast. You cannot chart your way out of an unpredictable policy environment. You can only size down and pray. Speaking of praying, let's check in on the people who already lost. The people in the tariff tornado who got hit, got hurt, and are now asking the internet, can I come back from this? The answer might surprise you. Actually, it won't. It really won't. Trade 4. A weekend discussion thread on WallStreetBets. The question is simple. Who here has actually made it all back? The OP is in a drawdown. He's been inspired by someone who turned $1,700 into $30,000 on 0 DTE options. He wants hope. He wants stories. He wants to believe. What he gets is a statistical massacre. The very first comment. 283 upvotes. 99.966% of people do not make it back. Of the remaining 0.034% who do, 0.1% of them post about it on WSB. And they are loud. That's it. That's the whole thread. Everything else is just detail. Think about what that means. The reason WSB feels like a place full of success stories is because the success stories are the ones that post. The 99% who didn't make it back are not posting. They're at work. They're eating ramen. They're explaining to their wife's boyfriend why there's a margin call notification on the shared iPad. Survivorship bias is real and it is brutal, but the thread delivers. Oh, it delivers. Here's someone who actually made it back. 150 upvotes. I've lost $40,000 in a span of 1 year. I made it all back after 4 years of working my ass off, saving and investing it properly into ETFs and mutual funds. Stop chasing the gamble and stay patient. Inspiring. Boring. Correct. Nobody on WSB wants to hear this, but it is the answer. But 3 words. 108 upvotes. I got a job. That's it. That is the entirety of the comment. No elaboration, no follow-up. Just 3 words that contain more financial wisdom than 90% of the DD on that subreddit. The market humbles you. Employment provides. This is the way. This is the, now here's my personal favorite, 70 upvotes. So I had $10,000, which went all the way to 120. I was devastated and stopped trading for a few months. When I started again, I got all the way to 12,000 and stopped. Great. Happy ending. Wait. It was very easy, really. Gramps dies suddenly and I inherited 20,000. Lost 8,000 and stopped. This man. This absolute man. He made it back via inheritance and then immediately lost 8 grand of Grandpa's money. Rest in peace, Gramps. Your legacy lives on as a cautionary tale on a finance YouTube channel. And then there's this gem. 81 upvotes. I made back my entire 2025 loss in January on 1 trade. I have since lost it all and then some. And then, and I cannot stress enough how good this ending is, he adds, like and follow for my trades. This man lost everything twice, documented it publicly, and is monetizing the journey. Honestly, respect. That's the content creator spirit. The 0 DTE warning is real though. Someone here lost 10 grand on a single SPX 0 DTE trade, which was 70% of their portfolio at the time. They said, you can be right at the wrong time and still lose. That's the most concise description of options trading I've ever heard. You can be right and still lose, because time decay doesn't care about your thesis. 0 DTE options expire on the day you buy them. Every minute that passes without the stock moving your direction costs you money. It is the purest form of gambling that the financial system has produced. It is also absolutely addictive, and I am not going to pretend otherwise. If you're watching this and thinking about trying 0 DTE options, don't. Close the app, go outside, call your mom. All right. Remember trade 1 where a guy forgot oil in his Iran war play? Feels quaint now, doesn't it? Remember trade 3 where tariffs went from 0 to 10 to 15% in a day? Baby stuff. Because trade 5 is where we find out that the entire tariff apparatus was illegal the whole time, and that the refund goes to everyone except the people who actually paid. Trade 5. The Supreme Court rules 6-3 that Trump's tariffs are unconstitutional. $175 billion in potential refunds? And then it gets worse. Much, much worse. The post is from RS Talks. The CNBC article lays it out. The Penn-Wharton budget model, a nonpartisan research group, estimates that importers could be owed more than $175 billion in refunds for tariffs that were collected illegally. The Supreme Court said the tariffs needed congressional authorization. They did not have congressional authorization. Therefore, illegal. Therefore, refunds. Simple, right? Here's a quick civics lesson since apparently we need one. The president has broad foreign policy powers, but taxing authority in the United States constitutionally belongs to Congress. The tariffs were imposed under executive emergency powers. The Supreme Court said those powers don't extend to permanent broad-based tariffs without congressional approval. This is not a complicated legal argument. It is 8th grade civics. And yet here we are. The top comment. 1,045 upvotes. When do I get my money back? Oh, I don't, and prices aren't going back down? This was just another grift of the American people all along? Who would have thought? The rhetorical question does a lot of heavy lifting here. Who would have thought? Who indeed? Because here's the thing. The tariffs were paid by importers, American companies, who then passed those costs to American consumers. You, me, anyone who bought anything imported over the past few years. We all paid. The refunds, however, go to the importers. The corporations. Not you. The prices are not coming back down. The money is not coming back to you. You paid the tax. Someone else gets the refund. The comment from You Rebellion, into money. Consumers paid the tariffs, but corporations get the refunds for it. It's just silly at this point, and people should be pissed. 147 upvotes. The word silly is doing a lot of work in that sentence. I would have used different words. But this is a family-friendly channel. Sort of. But then it gets truly dark. 239 upvotes. A huge amount of that going directly into Howard Lutnick's kids' pockets because Cantor Fitzgerald bought up all the rights to the refunds. Cantor Fitzgerald, the financial services firm, whose CEO is Howard Lutnick, who is also a senior government official, apparently bought up the legal rights to tariff refund claims, So the refunds flow through a company connected to someone in the administration. I'm not going to editorialize, I'll let you sit with that. 239 upvotes. Cantor Fitzgerald, Howard Lutnick's kids, the refund rights, sitting with it. Okay. And then there's this, 41 upvotes. Good luck trying to get refunds from a guy who doesn't like to pay his bills. And 35 upvotes. But Trump says the other countries pay the tariffs. These two comments side by side are the entire story. The theoretical refund exists. The practical refund may not. And the person who owes it has a historically complicated relationship with paying people back. The market implications here are enormous. $175 billion in potential government outflows, or not. Depending on legal battles that could take years, companies with large import operations are sitting on potential windfalls, or not. Depending on whether any of this actually gets paid, this is the market you are trading in. Enjoy. And remember, while all of this is happening, someone is writing a PLTR war play with no oil. Someone is debating whether PLTR is worth $330 billion. Someone is watching tariffs go from 0 to 15% in a single news cycle. And someone is asking the internet if they can make back their losses. The tornado doesn't stop, it just moves. Let's bring this home. 5 stories. 1 theme. The tariff tornado of 2025 created a market environment where nobody had an edge because nobody could predict the next policy move. Botman forgot oil. The PLTR valuation debate raged while the stock did whatever it wanted. Tariffs went from illegal to 10% to 15% in 24 hours. 99.9% of people who lost money didn't make it back. And the $175 billion refund went to the people who needed it least. The real lesson. In a policy-driven market, the fundamentals don't protect you. The technicals don't protect you. The only things that protect you are position sizing, diversification, and the humility to admit that you don't know what a tweet at 11 p.m. is going to do to your calls. We've all been botman at some point. We've all forgotten the oil. The question is whether you live to trade another day. If you enjoyed watching other people's financial pain from a safe distance, subscribe. If you didn't, you might be botman. Either way, the tornado keeps spinning. See you next time. Don't forget the oil.